Good evening, everybody. Sorry, we're starting a little bit late. Technical problems with Omnovia. Speaking of which, after the session tonight, we're going to shut down the room so that Omnovia can do a maintenance. But to not take up too much time, we've got the good fortune of having Andrew Keene here with us tonight. Got some very good techniques for option trading. So I'm not going to delay any longer. Andrew, welcome to the Candlestick Forum. We're anxious to see what you got for us tonight.
Thanks for having me. Thanks for the introduction. How's everybody doing tonight? Hopefully you guys are having a good day today. Wow, what a day in the stock market. The volatility index known as CBOE's VIX spiked 33% today. It's quite amazing. I, in general, trade a lot of equity options. I do trade futures, Forex, and stocks. But in general, I trade equity options. Here's my trade log from today, and these are all options, not stocks. So when you see a 500 lot, that's options, not stock. So I am a pretty big size trader. I'm pretty aggressive. So today I traded 1,000, 2,000, 3,000, 4,000, 5,000, probably 5,500 options today. So I trade a lot. I really get after it. You know, I like to do a lot of my webinars after the market's over. Simple and easy. I started this account. This is with Interactive Brokers. Started this account with $220,000 in it on January 1st. I built it up to $540,000. It got down to $305,000. Then I get back to $630,000. I took $100,000 cash out last week because I'm actually transferring from Interactive Brokers to Thinkorswim. I'm going to give the rest of that money over there. So I have about $470,000 in there. So this year I'm up about $400,000 on a $200,000 account before commissions. So I've been trading really, really well, and I'm here to teach you guys what I trade and my trading methodology behind it. So Floor Trader Secrets, Confessions of a Professional Options Trader. I'll be your presenter today, Andrew Keene. I want to thank everybody for coming today. You can feel free to ask questions throughout the presentation. I can multitask while I multitask. I run 8 monitors in my office. I'm usually running a trading room while answering emails, while trading, and everything else. So if you guys have any questions throughout this whole presentation, feel free to ask. There's no such thing as a dumb question. I'm fine. You know, any questions you guys want, you know, feel free to just ask. So this is Confessions of a Professional Trader. Past performance is not indicative of future results. My name is Andrew Keene. I'm a floor trader at the Chicago Board of Options Exchange for over a decade. Started my career at the University of Illinois, Champaign-Urbana, where I graduated with a finance degree. Had no idea what I wanted to do with myself. Investment banking sounded interesting. Financial advisor, financial analyst, all sounded interesting. But then when I got into trading, I've never looked back. I've been trading since 2002, so I've been trading for 12 years. And I have to confirm it with my confirmations from Goldman Sachs, but I think I only had 1 year losing, and that was 2009. You know, good traders always find a way back when they're down and out. Do I make money every day? Absolutely not. I lost a bunch of money today. Do I make money every week? Nope. Every month? No, not every year, not even every year. But I consistently make money over time, and I'm here to teach you about unusual option activity. There are 8,700 stocks. There are 4,199 stocks with options. I would say out of those 4,200 stocks, I probably traded about 2,000 of them. So I will trade anything and everything, and I watch institutional order flow, and I'm here to teach you guys about that. Actively trade, like I said, futures, Forex, stocks, but mostly equity options. Regular contributor on CNBC, Bloomberg, Fox Business, Sky Australia on Monday. Bloomberg, co-host the show with Trish Regan and Adam Johnson, my boy, New York a lot. Fox Business, last time I was out there, co-hosted the show as well. Simple and easy. They're not going to put you on TV if you don't know what you're talking about. There's a lot of times they'll just throw random questions on you, and you have to be able to think on your feet. Volume versus open interest, of course. Little risk disclaimer here. Day trading, short-term trading, and option trading is very risky. The difference between a good trader and a great trader is good traders think about how much money they can make. Stop being a good trader. Start being a great trader. Great traders think, if I am wrong, how much money can I lose? Okay. Good traders think, I can make this much. I am not a good trader. I am a great trader. I always think about how much money I can lose first, okay? Before I think about how much I can make, I want to know how much I can lose. Where is my exit plan if a trade's not working right? I am not a registered investment advisor. I cannot give recommendations or advice. 100% of everything I trade on my own personal account. So I'm an aggressive trader. I like to trade. I trade a lot. I trade active. I have big P&L swings. I do it all in front of a live audience, and but I'm not registered at all. So let's talk about order flow, terminology of paper. And this will be recorded as well. What is paper? Who trades options in paper? Why is paper important? Okay. Stocks are boring. They don't make me enough money. I need more money. If you want to buy 100 shares of Google, $59,000 you're going to have in your account, right? It's a lot of money. You want to buy 100 shares of Apple? $10,000. Why trade stocks when you can trade options? There's so many examples, and I had an example in SBAC that I did another webinar today. The stock moved 2%. 2%. My option value doubled, okay? When I was on the trading floor, I watched institutional order flow. So these consist of hedge funds, mutual funds, pension funds, big traders, banks. They control the order flow. Anything in this world is with the difference of what one person's willing to pay for it, one person's willing to sell it for. Simple and easy, okay? What is paper? Paper is an order from a hedge fund, mutual fund, retail bank, or big trader. I repeat it. An order or paper is an order from a hedge fund, mutual fund, retail bank, or big trader. Currently, right now, there are no dark pools in options. Let me repeat myself. Currently, right now, there are no dark pools in options. So if someone wanted to go buy 10 million shares of Facebook, they can make it so no one else can see the order. If someone buys 100,000 calls in Facebook, I see that order, guys, okay? Throughout the course of the day, I work with a proprietary scanner that shows me around 1,200 trades a day, and I allocate my capital on 4 to 6 of the best trades during the day. How do I figure out what the best trades are? We're going to talk about this. So paper just means an order from a hedge fund, mutual fund, retail bank, or big trader. Who trades options? The big boys, guys. We're talking Carl Icahn, David Einhorn, Bill Ackman, okay, Cooperman. They all trade options, okay? So I am watching the biggest traders in the world trading options. Why is it important? They know more than us, okay? They're smarter than that. If I was going to say I'm smarter than Carl Icahn or David Einhorn, or I have more research, they have 15 analysts that have their MBA from Chicago sitting around a desk figuring out information. Raj Rotman went to jail. Why? Because he had too much information. They're just doing a study that 25% of all deal stocks have unusual option activity in the market. That means somebody always knows something before it happens. Once it becomes a public order, I can trade on that information. I repeat, once it becomes a public order, I can trade on that information. So what kind of trades do I watch? There are only 2 options, guys. There's a lot of complex order strategies, but there's only 2 options. There's calls, there's puts. Simple and easy. You can buy a call, you can sell a call. You can buy a put, you can sell a put. I am not watching 20 lots trade, guys. I'm talking about 1,000 lots. I'm watching 10,000 lots. Today, a trader bought 10,000 international paper, January 2015, 52.5 calls for $1.25. This was a $1.3 million bet. So I'm watching $1 million bets being placed all day long. Calls are bought for 1 of 2 reasons. That is it. So as I watch this order flow, I have to decide, what are they buying calls for? Calls are bought for 1 of 2 reasons. Calls are bought as speculation to the upside. Someone thinks the stock is going higher. Or calls can be bought as a hedge against a short stock position. Calls are sold against a long stock position, or calls are sold to establish a short stock position. Trader buys puts. They are buying puts for 1 of 2 reasons. Protection against a long stock position, or speculation to the downside. When I watch institutional order flow, when I watch unusual option activity, I will never know a trader's stock position. I repeat that. When I watch unusual option activity, I will never know a trader's stock position. So I have to try to take the trades that I think are speculative trades. Today we saw a trader sell calls in CF. They bought them for $4.90. They sold them for $12.50. I had a trade in PL. Okay, I bought calls for $1.30. The next day they were $10. I've gotten 3 takeover stocks in the last year. Trader sells puts. Is it protection against a short stock position, or is it speculation to the upside? Nobody in this industry teaches unusual option activity. Why? Because they don't have 12 years of experience from the trading pits, okay? You want to trade something easy to understand? Trade stock. Trade futures. Trade forex. Those are stock. Those are easy. Stock goes up, you make money. Stock goes down, you're long. You lose money if you're long it, right? Options are the best trading vehicle out there. The volume of options is nothing but increasing. There are so many algos that know your stops and everything else, okay? Trading stocks, trading futures, trading forex is like playing chess. You can never, chess. You will never ever beat a computer in chess. The chess is always right, okay? But try to play Texas Hold'em against a computer. A computer doesn't know when you're bluffing or not. Is my unusual option similar to the Nigerians? They do a couple things it's very, very similar, yes. It's very, very similar, yes. But there's a lot of trades that I don't take that they take for other reasons, okay? One of them is stock volume and controls. Another one is the chart. Sometimes they don't even actually look at the chart. They just see calls being bought and they think it's always speculation. So yes, it's very similar. So does this work 100% of the time? Absolutely not. Nothing works 100% of the time. But there's a reason, okay, that I've had 2 losing months in the last year. There's a reason I've made money 11 of the last 12 years. There's a reason I've made over $5.5 million in my trading career, because I trade institutional order flow. This is straight from the trading pits, guys. What I learned on the floor was to watch institutional order flow. Let me show you a prime example. In Apple, there was a trader that came in once a week. A trader would come in once a week, okay? And he would sell put spreads in Apple. Not every week, not at the same time, but once a week in general. This trader would sell put spreads in Apple, okay? Every time he sold put spreads, the stock went up. How does he know that? He's probably a pretty smart guy, right? So he knew, and he'd sell 10,000 put spreads in Apple. This guy was just printing money. Every put spread went to 0. This guy just printed money. So I want to watch institutional order flow. Anything in this world is worth the difference. Is one person's willing to pay, one person's willing to sell it for, okay? If you guys want to be taken over by the algos, you want to be, taken over by the HFTs, go trade stocks and options, trade stocks, futures, and forex. If you want to trade a real game with a new wave of technology and actually potentially be profitable every single month, you have to start trading options using unusual option activity. So there are 4 types of orders, and let's talk about what percent is bullish and what percent is bearish. If a trader buys calls, and these are all guesses that I've come up with throughout the course of my trading career. Trader buys calls. I would say 60% of the time it's bullish as speculation to the upside. 40% it is bearish and they're hedging a short stock position. Trader sells calls. Is he selling calls against a stock position? I think probably 50% of the time it's an overwrite against a long stock position, trying to get an extra dividend stream. And then 50% of the time they're doing it to establish a short stock position. Paper buys puts, 65% bullish, 35% bearish. So when they buy puts, why can you say it's bullish? You say to yourself, Andrew, that makes no sense. Every book I've ever read, they buy puts because they think the stock's going lower, okay? The hedge fund community has gotten much smarter throughout the course of the years. They don't want to be red flagged by the SEC for insider trading. So what do? The hedge fund will go buy stock in a company, and then they will buy puts. Puts, yes, not calls. They will buy puts. If you guys know the synthetics of an option, buying puts, buying stock is the synthetic of a long call. Jim Cramer himself had an interview about 8 minutes long where he talked about it, how he would buy puts, okay? He would make up a rumor about Apple's missing their numbers, stock would go down, and then he'd buy all the stock. Simple and easy. So the hedge fund community has gotten much smarter throughout the years. Paper sells puts. This is my holy grail of trading. Say 80% of the time they're selling puts to actually just collect that money, saying, hey, I'm willing to get long this stock down here. I just want to collect some income until then. So these are the 4 types of orders that I watch. So I, in general, try to watch most of the call activity. are in a raging bull market. There are three ways to trade a raging bull market. There is aggressively long, moderately long, or flat. There are no short setups whatsoever. And at the end, I'm going to give you guys the opportunity to look at some charts. You can fire any chart you want, and I will give you guys the opportunity to, I will say, bullish, bearish, neutral in seconds using my good friend, the Ichimoku Cloud. So, institutional orders. Who are these? These are the whales. Mutual funds, pension funds, sovereign wealth funds. By being able to see what the whales are doing, we can see opportunities to profit what the whales are eating and control risk by following larger trading organization and averting risk. Simple and easy. So those are the big whales on top. I just want to be swimming right under them, okay? I'm not trading 10,000 lots, 5,000 lots. Maybe I'll trade a 100 lot, maybe a 300 lot. I just want to be swimming under that whale and taking everything, let them clear the path for me. Then we have sharks. Who are the sharks? They are the hedge fund community. I want to be swimming under them. By being able to see what the more aggressive fish are doing, we can see opportunities to profit by following the smarter organizations. I'm not the one creating the trades. I'm not coming up with the research. I'm not coming up with the analysis of it. I'm just mimicking the hedge fund that I think is smart. If Carl Icahn said to you, hey, give me $1,000 and I'll give you a percentage return on it, would you do it? Yeah, probably. He's a pretty smart guy. What about if David Einhorn? Maybe you could get into David Einhorn's fund for $10,000. People are always asking me, Andrew, you're a great trader. You make a lot of money trading. Let me give you money, okay? Can I give you money and then you can trade on it? I go, I can't. I'm not registered, and the government won't let me trade on it unless I'm registered, okay? Which is bad for the people that want to invest with me, but it's good for you guys because I can offer my opinion for anything. If I was registered, I wouldn't be able to go through charts and tell you if I was bullish, bearish, or neutral because that'd be known as recommendation if I had a position on. You know, they would say that I'm recommending something because I have a position on it. I'm not disclosing it, right? So I just want to follow the sharks. These hedge funds are smarter than anybody out there, okay? The hedge community, especially the hedge fund community that trades options, is unbelievable. So let's look at an example of unusual option activity. This was a trade in GERN. These were OC2 puts. These were sold on the bid. So if we see here, sweep detected at 11:20, 10 seconds. A trader sold 11,500 GERN OC2 puts for 11 cents. This was on the bid. Opening position, which is always so important, and the stock was trading $2.19. This trader, if they do not have a stock position on, is saying they're willing to get long 1.15 million shares of GERN at $2. And for that, they're collecting about $111,000. If you say to yourself, well, that's not a good trade. Why would this trader do it? Well, as long as the stock does not go under $2, which is 10%, this trader will profit on this trade and collect all the money for selling those puts. You or me might say, this is a bad risk versus reward setup. I don't want to sell puts for 10 cents. The stock goes to zero. I blow out my whole trading account. Like I said, we're not the ones creating the order. When I saw this hit the tape, I bought calls and journ. Those went from 30 cents to $1.20 within days. That was flow. And every single day, I take trades, 30% gains, 50% gains. You know, I took a trade in PL, which is a Chinese insurance company. The calls went from $1.30 to $10 the next day. That was good for 800% returns. So, sweep detected. What does that mean? That means they took the whole trade at once. Timestamp. This is the actual time of trades. If the insider is trading on insider information, that's fine. They can get in trouble. We cannot. Let me repeat these. These are all public orders, okay? If the hedge fund is trading on insider information, and it comes out that they knew something, they can go to jail. But I cannot, because I'm just trading on public information, okay? There's been examples before in the past when traders have been trading on insider information. I had to call my lawyer one time. I was like, hey, somebody came in and bought a bunch of calls. Stock got taken out the next day. I bought calls once I knew the order. Andrew, you didn't do anything wrong. You're just reacting on public information, okay? So I'm not only using the hedge fund's resources, the hedge fund's insider information, it's all 100% legal. It's the greatest thing ever. Also, no dark pools and options, guys. I repeat this, and it's so important. If you guys are in the 90% of traders that lose money, right, because 90% of traders lose money. Simple and easy. They do, okay? If you're in the 90% of traders that lose money, you got to try something different. You got to be willing to expand your trading plan. And using unusual option activity is probably something a lot of you guys haven't seen before, okay? It would be nice for you to teach us to be able to detect this. Well, that's what I'm going to teach you guys. I'm going to teach you how to use unusual option activity. What are the important criteria and steps we can look for in unusual option activity? Bought or sold. This is red or green. Trade size, 11,500. Symbol, GERN. Expiration, October. Strike, 2. Type, puts or calls, that's it. See, there's the 2 puts. Price traded, 11 cents. Implied volatility at the time, $2.19. So this breaks down the trade simple and easy. This shows you what a huge, massive trader is doing. He's selling puts in GERN. I could do a lot of different strategies depending on what kind of trader I am. I can buy calls. I can buy call spreads. I can sell put spreads. Is the unusual option activity reflected in the stock volume? No. Stock is separate than option volume. Okay? Every single stock has a percentage of stock it trades in a day. Facebook trades 50 million shares. If Facebook trades 75 million shares in a day, it's 1.5 times usual volume. Okay? Options are the same way. Bank of America might trade 500,000 shares. Half a million options. If it trades 2 million options that day, that's 4.0 times usual volume. Times usual volume is unusual volume, okay? This is the new wave of trading. This is what CNBC talks about every single day. If you guys watch CNBC, you see John Nigerian every single day. Pete Nigerian saying, unusual option activity. These calls were bought for 30 cents, went to $1.50. These calls were bought for 40 cents, went to $2. I talked to TD Ameritrade. I talked to the director over there. I said, you got to be talking more of unusual option activity on CNBC. Because this kinds of trades happen every single day, guys, okay? There is someone making hundreds of thousands, if not millions of dollars every single day. My goal is just to decipher the good trades from the bad trades, okay? Not every trade is going to be a winner. I watched 1,200 trades going across the tape. I allocate my capital on a certain amount of it. Exchange, you would have to set up your own criteria field in Thinkorswim. You'd have to set up your own criteria field. Opening or closing. This is an opening position. And where the stock was trading at the time. So this little criteria shows you everything, okay? So, unusual option activities example. Let me see if I can get something really quickly. Sorry about that, guys. I'm just trying to look for something. I thought I updated this with a better example for you guys. So, at 11:20 and 16 seconds, unusual option activity. This was 8.6 times usual volume, okay? So that means that this stock usually trades about 1,500 options in a day. If it's not unusual option activity, then is, sorry, we have a little glitch right here. Give me a second. Just trying to see if I can get something. So this is, give me a second here, guys. Sorry about that. Trying to find something a little bit better. Okay, so in GERN, at 11:20 and 16 seconds, a trader sold 11,500 of the GERN OC2 puts for 11 cents. Their risk, 126,000. Oh, sorry, this is wrong too. Their risk and reward is wrong. Oh, hello. Oh, that's right. The reward. So their risk on this trade was $2.17 million. Their potential reward on this trade was $126,000. And you say to yourself, why would someone risk $2 million to make $126,000? Simple and easy. Obviously, they knew something, right? So a trader has to buy 1.1 million shares under $2. 1.1 million shares under $2. If I bought the GERN October 2 calls for 30 cents, they went up to $1.80. So using this unusual option activity, you could have bought these for 30 cents and they went up to $1.80, okay? That is 600% returns within days, guys. Another example, and this is my favorite stock in the whole world. SBAC at 11:07, a trader bought, and it was labeled as unusual option activity, 14.3 times usual activity. Trader bought 8,000, okay? He bought 8,000 of the SBAC. He bought 8,000 of the SBAC. February, 70 calls for $1.60. Then, just a couple days later, 8 days later to be exact, a trader sold these exact calls for $2.60. So they bought 8,000 at $1.60, and then they sold them out at $2.60. So a trader, within the course of 8 trading days, made a net profit of $800,000 on a. Just give me 1 second, guys. I'm just going to switch something out real quick. I have these newer examples here. Just give me 1 second. This is a better example, and this is a newer example, because this is a trade I took about a week ago. The other examples were a little bit farther in the past. So this is an example in PL. So sorry about that, but we'll get it going now. An example here in PL, okay? In PL, a trader bought 1,000 of the PL June 60 calls for $1.25. This was on the offer, okay? The next day, the stock got bought out for $70 cash. I bought these calls for $1.35 the day that that institutional trader bought those calls. Those calls went to $10 the next day. I bought a 30 lot and I profited $24,000 overnight, guys, on a 30 lot. You see, this was in the order hit, okay? They bought June 60 calls. The next day, literally, not figuratively, literally, the stock went from $60 to $70. These calls went from $1.25 to $9.30. I was long 30 of them. 30 lot, I made $24,000 cash in my pocket overnight. So, how does the order process work? The institution will create the trade based on research, information, and analysis. They call their broker to get the trade executed. They will shop the order to all the trading desks, Citadel, Goldman Sachs, Barclays Bank. Then the trading will go to the pit and they execute the trade. Once it's executed, it gets sent out to everybody else. and everybody else can see the order that they traded. So I'm watching real-time trades straight from the trading floors. So I'm sure you guys all have a favorite dessert. My grandma used to make the best cookies ever, okay? They were so good. And I would say to her, Grandma, tell me your recipe. And she would never tell me a recipe. She never had it written down, right? She would just throw together the butter and the sugar and the chocolate chips and the flour. It was just all in her head, right? She had it in her head. And when I was younger, and I was only 25 years old, I used to say, those who can't do, teach, right? Simple and easy. Sounds like it makes sense. Now that I'm almost 35, and I'm older, I'm a little bit more mature, okay? I've written a book now, okay? My main goal is to teach you guys, okay? 90% of all traders lose money. That is a fact. The average time span of a trader is about 18 months. My goal in my industry is to make traders last longer, make better decisions, teach them, and potentially make them more profitable traders. Our retention on our subscriber base is almost 85%. Why? Because I'm really good at what I do. When people ask me all the time, they're like, hey, Andrew, what do you do for a living? I'm like, well, I run a trading room, and I trade for a living, and people watch money to watch me trade. They think it's insane. I go, well, I'm really, really good at what I do. So I'm going to teach you guys here a trading plan, okay? Simple and easy. You can write this down. You can get the slides for it later. But I'm here to teach you guys my secret recipe, what goes through my head. And I used to have a sales guy, and he said, man, Andrew, if I could just extract everything that comes out of your head, right? If you could just tell me everything that you're thinking when you're making a trade, we could just make a robot, and it would just trade all day long, okay? So there's a secret recipe, and it's called the Oak Ribbit Trading Plan. You guys can write that down if you want. It's OCRRBTT. This is everything I watch when I'm looking at institutional order flow. How do I know what's a good trade from what's not a good trade? This is the scanner that we use, okay? This is the actual scanner that I watch all day long. But look at this thing, guys. There's 1,500 trades that go across. If you don't know how to trade and you're trying to trade unusual option activity, good luck to you, okay? You're never going to make money. I mean, look at this thing go. Just goes all day long. How do I know which are the best trades? How do I consistently make money year after year? How am I made millions of dollars in my trading career trading unusual option activity? And that's what I'm here for, guys. I'm going to give you my secret recipe. And it's a trading plan called the Oak Ribbit Trading Plan. OCRRBTT. This is everything I watch during the day. But if you don't know what you're looking at, you're just going to drive yourself crazy. So, Oak Ribbit Trading Plan. The first thing I say to myself, okay, I always say this first to myself. Have I traded the stock before? Have I made money trading the stock before? I will not trade institutional order flow that I haven't made money on before. There are certain stocks that trade better on unusual option activity. There are certain stocks that don't trade so well on unusual option activity. Stocks that trade well on unusual option activity. SBAC. Anytime I see an SBAC trade, I'm in. Dunkin' Donuts. Anytime I see a trade in Dunkin' Donuts, I'm in. Twix, TWX, Time Warner. Anytime I see a trade in TWX, I'm in fast. LVLT, individual stocks, IMAX, Lionsgate, CBS. There's certain stocks that trade better on unusual option activity. There's certain stocks that trade worse on unusual option activity. And let me tell you, go back to my example. As we talked about in Apple, trader used to come in and sell put spreads once a week for a year and a half, and he just printed money. Every single time. I made almost $1 million in Apple, not 1 year, but 2 separate years. And the reason for this, I just watched this guy. I just watched him trade Apple, and I did the exact same thing. Anytime he sold put spreads, I got long. It won every single time. Okay. There's a different trader, WLP, well points. Okay. Trader comes in here, buys a big block of calls. Stock goes down. Then he buys more calls. Stock goes down again. Third time, buys more calls. Stock goes. What is this guy doing? He just keeps losing money. He's just burning through cash. Well, I don't know his stock position on. So this guy was buying these calls as protection against a short stock position. So then and only then, I can say to myself, hey, I've traded this stock before. I've made money trading the stock before. Okay. Trade Alert is the unusual option activity feed, but if you don't know how to use it, you'll lose more money than anything. I would not suggest buying Trade Alert unless you've been trading for 15 years plus. Can you run for a scan for unusual option activity and save it on a watch list? It will update itself? No, I don't think so you can. Yeah, at Thinkorswim, you would have to create it yourself. You'd have to create your own criteria field in Thinkorswim. No, it's not. It has nothing to do with Guy Cohen's. I've seen his before, and his is. I wouldn't say anything bad about anybody, but it's a total different process. Mine is looking at individual orders, not call-put ratio. Because calls are puts and puts are calls, because you can always change it with a stock position. Okay, I need to know one individual big order. That's all I need. Okay, so then and only then, I've said, hey, I've traded the stock before. I've made money on the stock before. Then I go through the Oak Ribbit trading plan. The O in Oak Ribbit stands for option volume versus open interest. And let me explain this to you. There's volume, there's open interest. Volume is how much has traded that day. Open interest is how many exist before today. I want to take opening positions only. I do not care about closing positions. So all I care about is when a trader is putting on an opening position. So I want to make trades where the volume is greater than open interest. Volume is greater than open interest. Next is a hedge, okay, is the chart. I look at a chart, hedge or speculation. If calls are being bought, I want to see a bullish chart. If puts are being bought, I want to see a bearish chart. If calls are being bought and it's a bad-looking chart, I will not take a trade. We saw a trade today going across the tape, and, ooh, hello. And MCP, I think it was. We saw calls being bought in MCP, okay? If you guys know about technical analysis, is this a bullish-looking chart or bearish-looking chart, okay? I always want to make sure the chart lines up. If it's a bearish chart and calls are being bought, I'm assuming that they're buying calls against a short stock position. Someone says volume versus open interest. How do you determine if the volume in an opening strike is increasing or decreasing? Just look at the volume. Look at open interest. Volume is greater than open interest, then it's a trade to be made. Volume is less than open interest, they could be possibly closing their position. So I always want to make sure volume is greater than open interest. What time of unusual option activity? I look at it every single day. Open interest, how many exist total in the world? Do I have an HFT feed? Well, this is coming straight. The trade alert's coming straight from the trading floor. I would have to look at his versus mine. If he says he has an HFT feed, I don't know. Maybe he does. Works for me. I just stick to what works for me. So, got to make sure the chart lines up. Then I can put on R&R. Some people like rest and relaxation. I don't believe in rest and relaxation. I believe in risk versus reward setup. And I say, guys, the difference between a good trader and a great trader is a good trader thinks about how much money they can make. I'm a great trader. I say, if I'm wrong, how much can I lose? The risk versus reward is an important concept, okay? Don't buy calls for $1 and say, oh, I hope they go up in value. That's not a trading plan, guys. I have in my mathematical trading plan, in the front month, I use 3 exits. The next month out, I use 4, and then 5 for 3 months out. And then 5 months out, I use 6 options, okay? So have a mathematical plan, guys, okay? Don't just say I'm going to buy a call and I hope they go up in value. That is not a trading plan, okay? R&R does not stand for risk, does not stand for rest and relaxation. It stands for risk versus reward setup. Then break even. I always need to know where on expiration, if I hold my position to expiration, where is my break even point? So important to know. You can use resistance and support. You can use Fibonacci levels. You can use the Ichimoku cloud, which is my favorite. Do you match the market maker expiration or wait until the stock starts to move? When I look at unusual option activity, I go through this trading plan in my head that I'm teaching you guys today. This is what I do in my head. Hey, have I traded this stock before? Have I made money? Yes. Volume versus open interest? Yes. How's the chart? Chart's bullish. They're buying calls. Boom, I'll jump on board. I'll buy calls. I already have my targets in place. Time and target, TNT. Some people call it tacos and tequila. I love tacos and tequila, but I call it time and target. If I am wrong, where am I going to take my trade off? Am I holding this until expiration? Is this a day trade? Is this a swing trade, okay? Everybody trades differently. I day trade, I swing trade. I have positions for a week, 3 weeks, for 3 months, okay? Every trade is different. So you have to decide before that, hey, when am I going to get out of this position? When am I going to put it on? Time and target, guys. TNT does not stand for tacos and tequila. As much as I would like to have tacos and tequila and have rest and relaxation, it's not important when you're trading. I always say in trading, my number one goal in trading, simple, easy, period, is to have fun, guys. So I tell everybody, all my subscribers, the number one thing is to have fun. Because if I didn't have fun when I traded, I wouldn't trade. Number 2 goal in trading is to make money, okay? I'm not in the business to save the manatees. I'll save the manatees one day, but I'm not looking to save the manatees when I'm trading. Number 2 goal is to make as much money as possible. Simple and easy. Number 3, easy, risk management, okay? The difference between good traders and great traders isn't the entries, guys. It's the exits. You look at the best poker players in the world, okay? Do they get better cards than anybody else? No. They make better decisions than anybody else, okay? They know when to fold, even if the guy has a better hand, okay? They know when to call when the guy's bluffing. It's so important. There's so many good analogies for trading, okay? One of my analogies is poker, right? Because the best poker players in the world, they might lose on a day, lose in a week, but they always end up with all the money. Just like traders, guys. Trader might lose money in a day, even a week, but in the long run, the best traders always make the most money. Do I look for unusual option activity for weekly or monthly options? Any option possible. I look for anything possible. Andrew, did you say you have 3 exits for front month options? In general, weekly options, 3 exits, 1 to 3 months out, 4 exits, 3 to 6 months out, 5 exits, and if I have something that's 2016, which is very rare, I have 6 exits. So I'm watching this, guys, all day long, and this is the trading plan, okay? This is how you can take a trade that you see maybe in Thinkorswim, okay? You see an order in Thinkorswim, how do you know if it's a good trade? Use this trading plan, guys. It's that simple, it's that easy, okay? Stocks, boring. Algo-based, manipulated, okay? HFTs, run your stops. Stocks, futures, and Forex, exact same way. Options, maybe one day they will be like that, but not right now. There are no dark pools for options. Every single trade I see throughout the course of the day. So, first one, quick little review here. Open interest, so important. I want to take trades where volume is greater than open interest. Sometimes, I'm an expert trader. I've been trading for a long time. I will take trades where the volume is less than open interest. But in general, volume versus open interest. That's the second step in trading. First step, have I traded the stock before? Have I made money trading the stock before? Second one is volume versus open interest. Then, charts. You're taking a bullish trade. Want to make sure the chart is bullish. Whatever technical analysis you use, great. Okay? Whatever technical analysis you use, great. Risk versus reward. Every trade, I want to define my risk. Know how much I'm willing to risk on a trade. You can do it as one of 2 ways. You can do it as a percentage of your total book, or you can do it as a dollar amount. Everybody trades differently. In general, I have a $500,000 trading account. Okay, I, in general, usually try to put about anywhere between 33 to 66% of my book is in options, and the other book half is in cash. Okay, usually I have half my book in cash. On every trade, you look at it as a dollar amount or percentage on your book. No one trade should be more than 20% of your account. I was talking to some guy today. He's like, I took 5,000, turned into 80,000. I thought Apple was going to sell off. I lost all my money. Okay, no position will ever blow out my trading account. Okay, no position will ever blow out my trading account. So look at stuff, risk versus reward. Break even. If I decide I want to hold this trade until expiration, where's my break even? Where on expiration does the stock have to go? You can look at break evens based on support, resistance, and moving averages. Time period. Time is so important, guys. Your timing's always got to be right. For earnings, I like to trade weekly options. But other trades, you know, I will put on some trades. There are certain trades that I put on during the day, and I say, I will take this trade off by the end of the day. I call win, lose, or draw. WLD. Win, lose, or draw. I will take this trade off by the end of the day. I know certain trades are only day trades. I had a trade yesterday, SWN. I bought 500 calls in SWN. I profited $2,600. Today, the stock was down $2. I would have lost probably about $8,000. Okay? So there are certain trades that I know are only day trades. For me personally, okay, the best day trades are weekly options or front month options. Everything else I try to leave on a little bit. Okay? I bought some go-go calls today. GO institution came in, bought a huge amount of go-go calls. The internet stock, internet on the planes. I bought calls, and then I sold out 80% by the end of the day. Okay? So I'm always constantly tweaking my trading plan, and right now it's a great environment to day trade. Unbelievable environment to day trade. And this is for anybody kind of trader, okay? If you guys are beginner 101, this is perfect for you. If you're looking to trade options, okay, there are 4 stages of a trader. Stage 1 of a trader, usually you lose a lot of money. That sucks, but that's usually the 4th stage. Stage number 3 is you lose less money. And you say to yourself, well, I'm not losing as much money. Stage 2 in trading, you start being profitable a little bit. Hey, this is kind of fun. I'm actually making money. Stage number 1, you just crush it. Hand over fist, money counting in your pocket, walking out with hundos wherever you are, buying everybody drinks and dinner. That's where the stages I am right now. And I've been in all the stages, guys, before. I've blown out my trading account twice. Knock on wood, it hasn't been for 8 years. Okay? And I've learned, and I'm here to teach you and educate you guys so how you guys don't make the mistakes that I've made. I have traded. This year, I trade about 5,000 options a day, guys. So I traded millions of options, and I've traded 50 million shares of stock. I've made a lot of really good trades, but the good trades don't compare to what you usually see. What do you usually see? You usually take off you remember the bad ones. I'm in the same level that you guys are. Every single person here, whatever your stage of trading, I have been. Okay? I used to clerk, wake up at 5:30, take the train in the morning, learn options. I didn't know anything. So I've been in the stage 4 where I didn't even know anything about an option. I've been in stage 1 where I've just continued to make money, hand over fist, over and over. Then I've been back to stage 2. It goes back and forth, right? So I'm here to teach you guys how to take your trading to the next level. Whatever stage you're at, I will get you to the next level, okay? I promise you that, okay? Because I'm here to teach and educate you guys. I'm here because I want everybody, and this is my service in the industry. I've made so much money trading that I want to teach people the proper way to trade. And if you're just slinging from the hip and just taking a trade because some guy says it on CNBC, or you're taking a trade because you think the chart lines up, okay, this is the only trading plan that has consistently made me money time and time again. Ichimoku Cloud, love it. Use it every single day, okay? But it hasn't consistently made me money for futures or for Forex. Do I want to trade stock against the HFTs? Heck no. They're smarter than me. They're going to run my stops. They know all my orders. I want to trade options. Okay? Data you could get in this chain, yeah. Targets are really important, usually in weekly options. Then I will have 3 targets. Monthly, I'll have 4. Next month, I'll have 5. And then I'll have 6 for something that's more than 6 months out. So this is an example of the PL1 we talked about. This trade hit our tape on June 3rd, early in the trading session. Does this meet our unusual option requirement? Number 1, it's labeled as an opening position. That is great. Perfect. The chart is trading in a bullish territory. Great. Risk versus reward. Perfect. And this trade is X times usual volume. So this has made it a very interesting setup. and this is why I took this trade. What happened? Okay, so we saw, number one, have I traded the stock before? No, I've never even heard of the stock. Okay, makes me a little bit worried. Number two, volume versus open interest. This was an opening position. Number three, chart. Above the cloud, above the 9-period moving average, above the 26, above the kink is trading above where it was trading 26 periods ago, and the future cloud is great as well. So everything lines up as a bullish signal on my chart. So let's take this trade. Let's see how this trade then did. This was a trade that I did in front of my subscribers live. Entry to open and filled. I bought 30 PL June 60 calls for $1.35. I have 4 targets. This is the front month option. $1.50 and up every 20 cents. Confidence. I do a confidence scale for all my traders, okay? I say which trades I'm the most confident, which trades I'm the least confident. This was an entry that also hit option hacker. This was actually a relatively small position for my book, but let's see what happened on the next slide. Boom. That same night, the stock gapped up, okay? These calls went from $1.30 to $9.30. I profited $24,000 profit overnight on this one trade, guys. And this was a small position for me. I only had 30 of them. If I had 300 of them, well, that was a big different story, right? But I only had 30 of these calls, and this led to huge profits overnight. I was only risking $4,900, and I made $28,000, guys, on this one trade. So, on this trade, I knew my risk, $4,050. I exited to close and filled the exact next day. This is the actual timestamp that I sent to my traders. Exit to close and filled. I sold all 30 PL June 60 calls for $9.30. Paid $1.35 out of PL. On a $4,050 risk of position, I was able to profit $24,433. This is a textbook case of unusual option activity. It is widely believed that there is options activity like this ahead of 25% of the mergers and acquisitions. How crazy is that? 25% of the mergers and acquisitions, there's unusual option activity and people just printing money. There's not enough people at the SEC to investigate everybody. This PL trader's never going to get investigated. If he gets invested and goes to jail, I can't. But he's never going to get investigated. There's too many cases of this on a day-to-day basis. GMCR. This was flagged on CNBC. Trader bought 4,222. June 13th, 120 calls for 25 cents. Look at this. Have I traded Green Mountain Coffee before? Yes. Number two. Number two, volume versus open interest. Yes. Number three, chart. Chart looked great. So this trade hit option hacker on June 6th with only 23 minutes to go. This is a very large bet ahead of the weekend. This trader thought there was going to be some announcement over the weekend. Entry to open and filled. I bought 50 of the Green Mountain Coffee. Next week, 120 calls for 27 cents. Let's see what happened. Started rumors that potentially there's going to be circulating that's going to get taken over. The stock rages into the close on the rumor that there was some kind of deal over the weekend. Did this trader know something? Look at this stock, guys. This stock went up $9 in what? An hour and a half? Rumors going around that Pepsi was going to buy Green Mountain or Coke was going to buy Green Mountain. Let's see how this trader did. I sold these way too early, okay? I had 50 of these, right? So exit to close and filled. I sold 10 of them at 36 cents. Hey, I thought I was doing pretty good. I paid 27. I sold some for 36 cents. Exit to close and filled. I sold 20 more at $1.30. Still, I thought good. What happened? Stock kept going higher. Exit to close and fill. I sold 5 more at $2. Exit to close and filled. I sold more at $3.10, guys. Within hours, I got 1,000% returns in Green Mountain Coffee. These were all time-stamped with Interactive Brokers and all trades that happened. Yeah, look at this 5-minute bar of Green Mountain Coffee. They bought these calls right here. This is where they bought calls. We go back to the timestamp of where they bought them. The timestamp's not on here. But they bought them right here. Next week, 120 calls. Stock went up $7 in an hour and a half. And this is an example from 2 years ago, 5 years ago. Okay, I show examples of trades that I make money on every single week. This was from July 15th, 2014. This was what? A week ago? 2 days ago. Look at that, guys. Boom. I sold them at 36 cents. I was stupid. It went to $3.10. This trade netted huge profits in only a few minutes. Another great example of unusual option activity. Why take these trades? The hedge funds and bigger traders, simple and easy, guys. They have more information than us. That is why they're always getting in trouble for insider information. Trade with the pros. Imagine knowing Carl Icahn or David Einhorn's positions before these are disclosed. Okay? These are their positions. They're trading them. I watch them. There's no dark pools. I can see every single trade. All trades are public information. Summary and key takeaways. Reading paper does have its limitation. It is not the holy grail system, guys. It does not work every single time. Call buying is not always bullish. Put buying is not always bearish. Bulls cannot bluff selling puts. Large paper and unusual volume will put probability into your favor. Remember the Oak Ribbit trading plan? No trading plan or trading system is without losses. If I said, guys, I created a trading plan and I make money every single day on every single trade, I'd run for the hills. All I care about is my bottom P&L. And I started my trading account this year, and I'm up probably about $400,000 before commissions. Okay. So we have an unusual option activity trader workshop that you guys can sign up for, okay? I will show you and teach you guys the secrets of how I made $5.5 million in these strategies and strategies like this, okay? This is a complete workshop. Today you got the introduction to unusual option activity. This is a complete workshop. You can learn to see Carl Icahn and other hedge fund trade positions before the rest of the public. Take out the guesswork and start getting profitable. Learn the confidence scale and avoid blowing out your account. This course is available on demand. So the minute you purchase it, you can start learning about unusual option activity. And we're selling it today for only $97. You guys can click on the link below, optionsonthefloor.com/like. Oh, thank you. And we're going to do something really cool here. I call it lightning round. So there's the link, optionsonthefloor.com/like. The minute you guys pay for it, then you can start learning unusual option activity like the pros. Today, I gave you an introduction of unusual option activity. If you liked it, you guys should take advantage of this workshop. We sell it on our own website. I'll probably show you on our website. We sell it for $399. We sell it for $399 on our website. So we're offering it today, and today only 75% off, guys. Okay. So if you guys liked what I talked about, if you're interested in unusual option activity, you want to learn more. So we sell it. You can see it on our website. This is a list of all our courses. So we sell it on the website for $197 and $197. So $397 on the website, and you'll get 24/7 lifetime access to this workshop. 24/7 lifetime access to the workshop. All right, guys, we're going to do something called lightning round here. This is my actually favorite part of the day. All you guys got to do is say any stock you want, and I'll tell you using my best friend, the Ichimoku Cloud, bullish, bearish, or neutral here within seconds. So just fire any stock away, and I'll tell you bullish, bearish, or neutral here within seconds. Atlas. Ooh. Ooh, where's Atlas? Good, we got a lot of stocks coming up. Atlas, technical bullish here. I think Cooperman said he liked the stock. Stock was up today in a down market. That's always a good sign. Using the Ichimoku Cloud, I don't like the big tail on top. Bullish to neutral. I'd rather be long than short, but I think it's in neutral territory here. URI, that stock is great. United Rentals had good earnings. Stock popped. I think it got up to 115. This is one of the best looking charts I've seen. Possible short-term top with the tail on top. I think URI goes higher. URI is a great looking chart. AMAT, we've seen a lot of activity in AMAT. It's a great looking chart for a while. Let's try this one out. AMAT. Recent pullback here. I think pullback should be bought in AMAT. I think AMAT goes higher. It's down 9 cents today. Everything on the Ichimoku Cloud looks good. You can buy AMAT. You can wait for 22.57. Put your stop at 20.57. I think AMAT definitely goes higher. LNCO. I keep putting this link in here so you guys, my thinkorswim is a little bit slow here. LNCO, bullish to neutral here. I wouldn't want to do anything in the LNCO. Netflix is a buy on any pullback. Probably pulled back. Netflix, you can technically buy Netflix on the close right here at 443. You put your stop under the cloud, into the cloud at 385. Netflix is a buy. I think Netflix takes out the 52-week high. We just did AMAT. Apple. Apple is a buy. Buy Apple here. Put your stop into the Ichimoku Cloud. You can put your stop at about $90. You can buy Apple today at 93. I think Apple goes higher. I wouldn't want to hold that position in earnings, though. Citigroup. Citigroup broke the cloud to the upside here. Citi's technical buy setup here in Citi. You can buy Citi at 49. Put your stop at about 47.90. I think Citi goes higher. Celgene. Celgene probably looks like an IBB. Bullish to neutral territory here. If you wanted to, you could get long Celgene here. Looks like it might be rolling over on a rounding top here. Gun to head, I'd rather be long than short, but I'd rather be flat than anything here in Celgene. HCLP. Guys, I know about every single stock. HCLP, this is a great looking chart. High Crush Partners. High Crush Partners is one of the better looking charts I've seen. You can buy High Crush today as it sold off here. Put your stop under the 26 period moving average. I think High Crush definitely goes higher here. Valero, wouldn't touch Valero with a 10-foot pole. If you wanted to aggressively short Valero, you can aggressively short Valero on the 9-period moving average. You can short Valero at 49.60. You have to put your stop at about $55. I would not be long Valero at all. PRGO is a good one. We've noticed a lot of unusual option activity. Probably one of my subscribers in there. PRGO, always noticed unusual option activity, that one. And PRGO, I think, goes higher here. Pretty good looking chart here. Recent pullback. You can buy the 9-period moving average. Put your stop under the 26-period moving average. Verizon. Technical bullish signal here in Verizon. The bullish signal actually came as the stock broke to the cloud to the upside about 48. You can buy Verizon here if you want at $50 or put your stop at about 48.50. I think Verizon goes higher. King Candy. I love King Candy. King Candy's going higher. It's breaking the cloud to the upside here. Had a big tail on top, and it made a new higher high today. That's always a good sign here in Candy. KNDI. I think KNDI goes higher here. Two ways to buy Candy. It is long or flat. There are no short setups in Candy. Monsanto. Monsanto hit a high of 128.79. Lower lows, lower highs here in Monsanto. Wouldn't want to do anything here in Monsanto. Got into the cloud. If the cloud breaks the cloud to the upside, I would look to buy it. But the lower lows and lower highs are not that great. PSX got into the cloud yesterday. We saw unusual option activity in PSX. The oil names I would want to pass on. Stock got crushed today. Nova 85s were bought yesterday, and then we saw the stock rally, and now it's selling off. Technically a short setup here in PSX. If you wanted to short PSX, put your stop above the cloud at 84. I think PSX actually goes lower. I wouldn't want to really be in any of these oil names right now. They really seem like they're really, really weak. ATHN. ATHN is in the Ichimoku cloud here. Nothing to do here in ATHN. Neutral territory. APA, Apache. Apache, if you wanted to buy here, I think it's okay to set up for a buy here in Apache. Put your stop into the Ichimoku cloud. Apache goes higher. Priceline is a whip you want to use in the Ichimoku cloud. Here in Priceline, neutral territory here in Priceline. I really want to do anything here in Priceline at all. Boeing, SWN got smoked today. SWN is a weak-looking chart. Boeing, technical short setup here in Boeing. It's gone onto the cloud a bunch of times. This is more choppy than anything. I'd rather be out of Boeing, but if I had to choose, I'd be short Boeing. TTWO. So let's talk about the course one more time, and then I'll leave it open to questions, guys, if you guys have any questions at all. So this is Unusual Option Activity Trader Workshop. I will show you guys how I made $5.5 million trading this strategy of unusual option activity. Learn the hedge fund traders' trades, Carl Icahn's, David Einhorn's, before it is out. Take the guesswork out and stop potentially being profitable now. This is a course on demand. The minute you buy it, you will start learning, and then you can get it lifetime access for only $97. We sell it on our website for $397. You can sign up at optionsonthefloor.com/like or call us at 859-963-3445. Does anybody have any questions about unusual option activity? If not, we'll go back to the chart, look about 5 more charts. Does the software come with it? No. Trade Alert is a separate service. It's $500 a month. What do I have to take advantage of the course? No, it's on demand. So the second you pay for it, you'll start learning unusual option activity and how to trade like the pros. Or you can give us a call at 859-963-3445. Does any broker have options volume or activity? Every single online broker, you can see volume and open interest. Does anybody have any more questions about unusual option activity? If not, we'll look at about a half a dozen more charts. Oh, I did a 2-hour fulfillment today, and I'm in my trading room for 4 hours a day talking. I don't know. There is no course date. You'll get it immediately. No waiting for courses anymore. This you will get immediately. You can immediately start learning. It's a workshop to learn how to trade. You can get whatever you want for free. It's a course on demand, guys. There's no waiting for it. You're a great speaker with a lot of analysis. Thank you. That's very nice of you. I like when people say nice things about me. It's because I watch the stock market and CNBC for 12 hours a day. It really is. Okay, we're going to look at about 6 more charts here, and then we're going to call it a day, guys. Okay, if there's any more charts you want to really, really look at, we'll look at some more charts here. Then we'll call it a day. I've been in here for a while. Amazon. Intel, buy it. I don't even have to look at the chart. Amazon breaking the clouds with upside. Technical buy setup in Amazon was actually 336. Amazon here, I wouldn't want to be pursuing an Amazon long. Buy the pullback at 340. Put your stop under 320. I'd rather be buying a pullback here. Visa. Visa is a chopping looking chart. I was actually long MasterCard. I took off my whole MasterCard position yesterday. It is a buy here on a pullback. These are pretty choppy here. You could have bought Visa today on the close at 218. Put your stop under 216. I think that's a good reward to set up buying the close today on this huge pullback in the market. But I wouldn't be aggressively getting after it. ARRS. Woo. ARRS, technical buy setup. I'd rather be neutral in ARRS than anything. BX. Okay, we're going to look at like 5 more, then I'll let you guys go. Call it a night. Hopefully you guys learned something about unusual option activity. If you guys are interested in furthering your education, $97 is pretty much a layup. Okay, 100% money back guarantee. If you take the workshop and you do not like it, I will give you your money back. I do not want your money if you did not enjoy the workshop. So that's a reason right there. Yes, I'll review the workshop. BX is technical buy setup here. They had earnings, weak looking candle today, but I'd rather be long and then short BX. So it is a workshop that's available on demand. The second you buy it, you can start learning how to trade like the pros. How did I make all my money trading unusual option activity? The step-by-step trading plan. It's an 8-hour on-demand workshop that will be available for perpetuity, 24/7. The minute you pay for the course, you'll start learning, okay? You can sign up on the link below, or you can give us a call at 859-963-3445. Take the guesswork out of trading, guys. Learn about a confidence scale, how certain trades are better than other ones, how to take targets, okay? Entries are easy. Most people give you entries. Exits are much more important. Avoid blowing out of your account, guys. This is the best course that I have available. I've done 6 courses over the last year. This is hands down the best one. I only give the best for your audience, Stephen. Thank you. You have a great audience, a lot of energy. Do we have any last-minute trades? If not, you guys should take advantage of this. $97, you can't go wrong. Money back guarantee for me personally. If you don't like the course, I'll give you your money back. I don't want your money if you don't enjoy the course. Thanks, guys. Everybody have a great, great night. We go over risk versus rewards. Yeah, it's from beginner 101 to expert. If you're a beginner, you'll love it. If you're an expert, you'll love it too. Okay?
Andrew, thank you very much.
Any more questions?
Very good information. Everybody, take a look at this. Another avenue for how to put the advantages or the probabilities in your favor. Andrew, thank you. Hopefully we'll have you back again.
Thanks for having me.
All right. Everybody have a good evening. We'll see you in the chat rooms.